Welcome back. We could all use a little insight when it comes to sorting out the stock market. The market has been on a tear during what are usually weak months, and stock market analyst David England is here with us this morning to explain. And so, David, where do you see the market going from here?
Well, Emily, we had a fantastic run since Labor Day. Normally September and October are low months, but it's been just the opposite this time. In some of the indexes, it's ran up to 15 to 17%. So we've had a little profit taking. What I see at this point is a healthy profit taking, which that's what we really need for this market to go up.
And something we want to talk about this morning, QE2. What is this, first off, and why is this a hot topic for investors right now?
Well, it's quantitative easing too. We had QE1 last year, 1.7 trillion. Now, many people are saying that 1.7 was not effective. The only thing that we don't know is what would have happened to the market without it. So we have to compare apples and apples and oranges and oranges. But the confusing part of it is where Treasury says that we have a strong dollar policy, and then they turn around and do all of this quantitative easing, buying of treasuries and these types of things. Well, what that does, it gives an artificial measure to the market. And that's part of the reason why the market is ran. One of the biggest reasons, and I'm going to just keep this brief, is that we measure the market by the S&P 500 and the Dow Industrial large cap stocks. Okay. Well, whenever we drop the value of the dollar, and by the way, the dollar just been sacrificed, it just keeps going down, although we've had a little bump up. That makes our products cheaper overseas in relationship to creating a better demand for them. So it's one of the easiest ways that you can do if you want a good market pop. So that's what's happening.
And what about gold? What do we see in the future for gold here?
Gold has been the talk of the town for quite a while. But anybody that's been watching our morning segments said that I prefer silver. Matter of fact, when we take a look at the GLD, the ETF, and for gold, and SLV for silver, silver has doubled the performance of gold. Even though I do like gold, my preference is towards silver. That's been a lot more profitable.
And what about when it comes to investing either domestically or globally? Where do we see the advantage there? Well, as
an American, I hate to say this, but a lot of our opportunities are going to be overseas. Many of the other countries are working with their businesses instead of against them. So matter of fact, when you take a look at even some of the emerging market countries, some of them have had twice the return that we've had here in the United States. So whenever we take a look at asset allocation, unfortunately, the speculative items now are going to be the U.S. instead of the global.
Interesting.
That's what used to be speculative. That's a scary thing.
That's something to keep an eye on there. Yes. And perhaps a seminar that might give people insight on this and a whole lot more is coming up soon for you, right?
This Friday. Yes, okay. It's a Financial Friday series at John A. Logan College. We've had many, many things on the table about ETFs versus mutual funds. Okay. The more the ETFs have money going into them, the more the mutual fund industry squawks about them. So we're going to take a look at the many, many opportunities on the exchange-traded funds. And that is this Friday from 9 until 4. So it's a full day event, and do people need to register in advance? Oh, they need to register now to get a seat because it will sell out. Okay, and that number to call there is at John A. Logan College. It's the Continuing Education Department is what you need to contact, 618-985-2828, extension 8249. So you can call there. It is $79 for the entire day, right? Yes, it's the same seminar, very similar I gave in Los Angeles a couple of years ago. It was $800 for 2 days. So $79 for our people, that's a steal. You're saving. Thank you so much. Stock market analyst David England, always appreciate you being here. Thanks for having me.